earlier on in the year, which means we can still be putting in good systems and structures to improve the management of our finances. And today's conversation really surrounds itself with the profit first system and implementing the profit first system, which we'll get into how we do that, what the benefits are, how this can be applied to different businesses, what system structures that you need to put in place to do it. And yeah, really looking forward to diving in. I wanted to introduce those of you to my trusted and esteemed colleagues. Barbara Greenberg, who's the senior bookkeeper internally at Illumination Wealth. She's a QuickBooks certified, pro advisor, knows the ins and outs of bookkeeping and accounting and implementing these financial structures into people's businesses, personal, real estate investment properties, to make sure that everyone's financial picture is clear. It provides clarity and actionable insights. And as well, I wanted to introduce you to Aaron Keith, who's the CEO of Buildify Systems. He's a longtime business coach. He's been the business coach that I've personally worked with for the last decade. And he basically has been supporting business owners with helping them grow, achieve scale, mindset, other structures, systems, and procedures that need to be put into the business. And what's unique about Aaron, when I first started working with him, with my own background in finance, he helped for me to structure my own business and personal budget. And I know we're talking about profit first today, which it came from a book, a specific book, but Aaron has been implementing profit first before this book ever even existed. Before it was written about a handful of years ago, he had the same methodology that he's been working with his business owner clients on before this book came to light. And so he knows this version or variations of it inside and out. And so really looking forward to having him share his knowledge of working with businesses really closely on their finances as well. So Barbara, myself, and Aaron will be presenting as we go. What the agenda is today. So how we're gonna break this down really into three parts. First, we want to talk about the key elements of the profit first system and kind of share with you the high level. Then we wanted to get into kind of implementing the profit first system. There's a number of things that need to be put in place and calculations that need to be done. And so we'll break that down. And then we have a question and answer session. I will encourage you to put questions into the chat box, and we're happy to dive in as we go as well. So if there is anything to any clarifying questions, please feel free to ask. We've also had people submit some questions ahead of time that we'll want to get to as well. And so that's really the agenda for today. So with that all being said, I am going to kind of hop into the presentation. All right. Let's see here. How do I get to the next page without making it too difficult? So part one, the key elements of profit first. So I wanted to talk from a really high level about what is profit first. And profit first is really implementing a new financial management system into your business. And the way that most people operate their business, or most accountants help their clients with their business finances, they use a different formula. And the formula is sales minus expenses equals profit. This new financial management system flips that script. It's basically saying sales minus profits equals your expenses. So you need to be thinking about, how do I build in profit first? Then what's left over goes to my expenses. So it's a new formula to making your business finances work, to ensure that you are, on the personal side, paying yourself first. When you hear people, and maybe I've spoken to my clients about pay yourself first, right? Save first before you spend. This is the exact same thing, but it's being applied to your business finances. So you are making sure that we're setting up specific structures to ensure that your business has the right amount of profitability first, and then we reverse engineer our expenses around that. So it's a whole new way of operating your business, but similar to the paying yourself first personally, we're applying that to our business. And why is this new financial system important? Because one, it helps to bring about financial stability, financial clarity, and at the end of the day, it's going to help to improve the profitability and cash flow of your business, because you are more focused on profit from the get-go than you have ever been in the past. So that's the three key things with this new financial management system: is sales minus profit equals your expenses, not sales minus expenses equals profit. So it's a new financial system that we're going to be putting into play. And so when we think about this new system, the way that it works from a high level is that there are specific allocations that you need to be thinking about when it comes to your business. And there's basically 4 key buckets that we're thinking about putting our money into when we implement the system. One is profit. And basically a percentage of every single dollar of revenue or income is allocated to a profit account to ensure that your business is generating enough profit to meet its goals. So this system has specific profit allocations. So that's one of them. The other thing that a lot of business owners kind of fall victim of is taxes. And with this system, you are going to be allocating a specific amount of your income or your revenue to a tax account upfront to ensure that the business has enough funds set aside to pay taxes, both any corporate taxes that you have, as well as any personal taxes that you have on the income being generated by the business. So we know, we are clear on what profit we want, how much tax we're going to owe on that as well. Beyond that, there's another bucket that's really important that a lot of people don't really know or handle it really nilly, and that's your owner's pay. And so in this system, we're going to make sure that a specific percentage of your income is allocated to an owner's pay account to cover pay for the owners of the business. This could be owners who are active in the company, partly active in the company, but it ensures that the owners are getting paid fairly for their role inside working in the business. And then there's a last allocation, which is for the operating expenses of the business. This is the percentage of income that is allocated to an operating expense account to cover all of the ongoing expenses of the business. Rent, office supplies, subscriptions to software, employee payroll, what have you. So these are some of the key financial allocations of this profit first system. And so the system is really based on applying and allocating a percentage of revenue. I know I used income above here. We can use revenue interchangeably to all of these different accounts for these specific and distinct purposes. Now, Aaron, maybe you can help. Why does this system break things out, by profit, by owner? Like, what's the importance of having these different...
There's so much to say about this. I think the first thing I want to say is the mental game of finances. I don't know about you all, but my parents didn't teach me about finance. School didn't teach me about finance, especially entrepreneurial business finance. And so for us, the example I like to use with my clients is a home. You relate to your kitchen differently than you relate to your living room, differently than you relate to your bedroom. And so for a lot of business owners, they have one account, has lots of money in it, and they're like, yeah, I have a lot of money. I think some's for taxes, some's for reserves, some, I pay my profit out of. They just have this big ball of money and they don't know how to relate to it. Power is having distinct buckets of money, just like a home. So if you can separate out your money, your mental relationship, your emotional relationship to that money transforms. So when my accountant asks me, Aaron, can you pay your such and such tax bill? All I have to do is click on my tax account and I can see exactly how much money's in there. I know exactly how much is in my profit account. I know exactly how much is in all my different accounts. That separation, that compartmentalization of money emotionally and mentally impacts me and gives me power. I have power to run my different companies because I have a lot of knowledge and control over that money. You can't control hundreds of thousands of dollars just in one bucket. when you think some's for taxes, some's for savings, some's for profit. Yeah, that's the biggest reason.
Awesome. No, appreciate you sharing. Appreciate you sharing. And so having, for our clients, we have clients that are in various different businesses, from restaurants to real estate agents to digital marketing agencies to aviation companies. And so having seen their business finances and having to work with different types of business finances, I'd be curious, Barbara, can this system be implemented for different businesses, or is it really like only service businesses can use this? What's your thoughts?
I would say it can be implemented for any business type. And also, we're not even focusing on it as much in this presentation, but it can also be used on the personal side as well. And it's basically a way that can, you can tailor it to fit your business needs. I mean, you already have that with bookkeeping anyways, because you have a chart of accounts and it's specific to your business. And all this is doing is putting in accounts that you can then allocate so that you, like Matt's saying, have a bucket for other needs, and that money's there and available when you need it.
Yeah. Profit first is a very elastic concept. It's something where, I work with about 55 CEOs a week in all different industries. And I do this model on all companies. I have it for my own companies that I personally own. And it's something that is very tailorable to any industry. You have a good bookkeeper, they can easily tailor this to fit you.
Yeah. And I think we need to be cognizant that someone in the restaurant industry is going to have different profit margins than, per se, somebody in the digital marketing industry. And so how these profit margins, how we set this structure up is going to be different depending upon the business that we're in. And we need to have some of that industry knowledge. And at the same time, because it is so tailorable, we can be creating different defined, when we looked above, we have specific profit first allocations. There's some advanced ways of setting this up, or different ways of setting this up, to be including other buckets that might be unique to your business, to ensure that we're properly prepared for those specific expenses that might show up in your business, be it there's sales tax that goes on to profit for a product-based company versus a company that doesn't have sales tax. So there's things that we can be setting up to compartmentalize things even further based on each business, each industry, the size that you are in. So I think that's really, really, really important. And so, we've talked from the high level about these different buckets, but I think for you to think about, why are we even doing this in the first place? Like, why are we even putting this in the place? What are the benefits? How is it going to help you? And some of the key benefits of the putting in the system is, one, I think for most business owners, they think about revenue. They think about revenue. We're getting in the habit of thinking about profit, because profit is what helps to drive cash flow, drives wealth, and drives value. And so it really makes prioritizing creating profit a habit. And it helps the businesses then to achieve their goals and ensure that the business is generating enough profit to meet those goals. So most people are focused on the revenue number, which is vanity. This is really thinking about how do we generate adequate profit and make sure that we're getting paid as the owner of the company, as the shareholder of the company, via profit, not just I'm getting a living wage for working in the business. So that's one benefit of profit first. Anything else?
Sure. Matt, I think it's also worth mentioning too, at least for a lot of my clients, I don't know if you see this as much, but for a lot of my clients, they pay themselves a salary or maybe a salary distribution. I'm like, well, that's great. You're getting paid a salary distribution for working in a business, working a job. You're the CEO. That's a job that you're being paid for. You're being paid for a salary distribution. But what about your investments? Like you put money into Microsoft or Cisco, and you invest your money. Aren't you expecting a return on that investment? Yep. And people don't understand, like, your business is a return. I mean, it's one of the reasons I have gray hair. And Matt used to have hair. I mean, you're putting in sweat equity. You're putting in money into a business that you happen to also be employed at. Your profit is how you get money back for that shareholder investment.
Yeah, for sure. And that's sorry, go ahead, Barbara.
Well, what I was going to add from the bookkeeping perspective, I often see owners, if they see money in their cash accounts, they think they can spend it. And this applies discipline to that so that you're not seeing that money in that account ready to spend, so that by paying yourself first, you're not short at the end of the, I just see cash flow issues all the time with companies when they don't apply a system like this.
Yep, exactly. And that's one of the things. This system helps to plan for the future, plan for growth, not raid profit for business expenses, so to speak, because it forces us to think about, if we're trying to achieve a 15% profit margin, but I need to go take money out of the profit account to then do the day-to-day business operations, we're not hitting those profit numbers. So it really helps us to make better financial decisions because we have all that money set aside, and it helps to keep us organized, right? Because now we know where every dollar is. It's crystal clear what that money is for, how much we have for our expenses. And then as Aaron was saying, that profit helps the business owner. Why are we doing this? To make life easier on the business owner, but also enhance wealth. And this allows us to enhance personal wealth because the increased profits is going to increase the wealth for the owner, providing more funds for your personal financial goals, for investments outside of the business, as well as within the business, right? If we're generating profits, we then have money to reinvest inside of the business for growth, which might be a great ROI decision. But at the same time, it also can help us take the money out of the business so that we can then go invest in buying an investment property, funding retirement accounts, buying a vacation home for our family. It helps to enhance the wealth of the owner, which I think is very important.
Oh my gosh. Yeah.
And the last component, which I don't think as many people think about, but as your business grows and scales, businesses with higher profitability, they're worth more money. They are worth more money to a potential buyer. And if you combine increased profits with increased growth, that just, exponentially can enhance the value of the business, which is what future buyers want to see. The higher the profitability, the higher the growth. This is a big wealth enhancer because your business value increases. And for many business owners, your business is the biggest asset that you actually have. So it allows us to diversify and get money outside of the business, but following this can help to enhance the business value as well.
Yeah, I want to touch on that. You all want to pay attention to this. I've sold 2 of my own companies, and I work with a lot of my clients in an exit or even an acquisition. And it's interesting. I sold my last company in the middle of COVID. I used to have one of the largest medical clinics in San Diego. And I was approached out of the blue. I was not planning on selling. And because I use a profit first model, our finances look spectacular all the time. Our profit accounts look good. Our tax accounts look good. Our reserve accounts, sales tax accounts, everything looks so good that we were juicy to this very sophisticated buyer. So you never know when a liquidity event's going to hit you sometimes. And this is something that's going to always set you up well. So I can't say that loud enough to you all. This is so valuable.
Yeah. Yeah. And then the other side is the business books don't look good. And then we're trying to scramble and say, this is an adjustment. This is an adjustment. And it doesn't create additional credibility with those future buyers. So
it allows people like me to help my client whittle down the sale price to buy your company because your books look terrible and you can't justify things, and we can nitpick and drive that price down. Yeah. So yeah, it's good.
So no, great points. And so I think the other thing is like with any new, the challenges, like Aaron, you've worked with a lot of clients, creating their business budgets and personal budgets as you become their, as you're their business coach. Like, what are the challenges faced with that you've seen your clients when it comes to like implementing these new structures or systems?
There's a lot to say here. So reel me in if I'm getting off track. I think the first thing that I hear is, oh my gosh, it sounds like a lot, right? Because one of the things I'm saying is we're going to open up some different bank accounts and we're going to start to compartmentalize your money. And they're like, oh my gosh, I have to open bank accounts and the bookkeeping and hubba. The first thing they feel is a little overwhelmed. So the first thing I would caution you on is, listen, being wealthy is not easy. Having a thriving, successful business isn't easy. Having a 6-pack isn't easy. things in life aren't easy. And you don't want to use easy as your measuring stick for approaching this conversation. We're the people on this call today, you're committed to something. You're committed to your future, your family's future, your business's future, and you've sacrificed to do that. This system is not hard. It's not hard. It's setting up some bank accounts. So I think that's the first thing that people just need to get their arms around. Having a really good bookkeeper that understands how to manage this system makes your life super easy. You know, it's one of the reasons I trust you guys. Having a bookkeeper who can set up your chart of accounts correctly, who understands your budget and can manage your budget for you and can help you with your transfers, that's all it is. This is, once it's set up, this is simple. I make all my transfers once a month. The bookkeeper updates my budget actual column. I fill out the budget, they fill out the actual. I get it on the 11th of the month, know exactly how my spending went. I can see all my transfers were made. I can see all my different bank accounts. I think it's relatively easy to set up. I think it's more of a mental overcoming of the setup that stops a lot of people.
That's a great point. Yep, absolutely. Yeah, there's new things to set up, new habits, new disciplines to put in place. And that's why having a team, around you can help hold you accountable to that. And, this is about your goals. So yeah, like anything new, it takes some getting used to, but with getting used to, it should make life easier in the, it is a long-term decision-making, process versus some short-term getting used to the new system. So yeah, that's great points.
From a structural perspective, the two things I recommend, like on this call, is have a finance period of time that's dedicated in your calendar. So mine's on Mondays, but you have to have your finance time that's reoccurred in your calendar, that is a time where you manage your business and personal finances. Second, got to have a reoccurring call with your bookkeeper. You should be talking to your bookkeeper, depending on your company, every week, every other week, or at least once a month, where they're walking you through the budget, they're walking you through what they're seeing, making sure the transfers are handled, blah, 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 blah. But those very simple structures make a profit first system very easy to operate.
Absolutely. And now I think that's just like a good segue into now, we talked about bank accounts. We talked about these different buckets. I want to talk about the implementation of this system, from a high level and what's actually involved in putting this into place more tangibly and specifically. So there's, in the profit first terminology, there's something called CAPS, or your current allocation percentages. And when they talk about CAPS, it's really looking at those different buckets that we talked about, your profit, your tax, your owner's comp, and your operating expenses as a percentage of your real revenue. And so I want us to define real revenue. So real revenue, as we're thinking about this, is the total revenue of the company. So that's one variation. So there might be a service business. It's an accounting company. All of their money all of the revenue is earned by preparing tax returns. They don't really have materials to purchase, really simple and easy to understand. That's their total revenue. Now, for other companies that might have a product business, real revenue would be defined as that gross revenue. However, we would subtract from that any materials or subcontractors used to create the product that was sold. And so depending upon the industry that, you will work with your bookkeeper to figure out what's the right way of figuring this out. Everything is going to be calculated against your real revenue, which will either be your total revenue or your revenue minus that materials and subcontractors. It's not quite cost of goods sold, but it's similar to cost of goods sold. And your chart of accounts is going to help to really clarify how to set this up properly. So we now know my real revenue, the total revenue of my company, if I'm going to use my company, the total revenue, and then we're going to calculate everything against the total revenue. We're going to review the last 12 months of our historical financials. We need to then look at, where is your business currently? How much profit do we have as a percentage of real revenue? How much operating expenses as a percentage of real revenue or total revenue? How much did I get paid as the owner of the company as a percentage of the real revenue? And how much profit did we have as a percentage of that real revenue or total revenue, depending upon the industry? Because now we get to look and see really crystal clear that profit was 3% of real revenue. My owner's pay was 20% of real revenue. My operating expenses were 85% of real revenue. Nothing went to tax, right? So this is going to show us how we are currently, because we need to know exactly where we are today in order to move forward in the future. And
Right.
I guess, Aaron, would anything to say about like knowing where you stand, like knowing where you stand now and the importance of that?
I mean, I'll hit it from a slightly different angle. I mean, I do budgets on a daily basis with my clients. I look at 50 plus budgets a month with my clients, and man, most people's budgets are not accurate. I mean, I don't know, I'm trying to think right now if I have a client who's ever approached me who presented me a budget that was actually accurate. So when I put them in a profit first model, it is so eye-opening. Usually there's tears after the eyes open, but it is very eye-opening to people how off their budget is compared to what they thought their spending was. It's just not, it's not in the realm. And it just shows that people weren't making the best financial decisions. They didn't have all the actual knowledge that the decisions they were making, they thought were making with real data. And the data was not real. It was not accurate data. So going into a model like this gives you such a different angle and vantage point on your finances. It really is transformational. I know we're saying this as a theoretical conversation, but when you can actually see, I wish we had like a before budget, after budget, and really show people what one company looks like in the old model versus profit first model. It's transformational.
Yeah, no, that's a great point. And I think we'll see on the next slide, like we, when you get set up and your bookkeeper or whoever you're working with can help you do these calculations, you're going to see where you stand today. Where do you stand today? But that's only one aspect. Like we need to know where we are so that we can figure out where we want to get to and how are we going to incrementally move the needle to be more profitable, to have more integrity around our finances. And that's really the next step. We see where we are today. Now we want to figure out where are we going to be in the future. So the next kind of key terminology is TAPS, which is your target allocation percentages. And this is the percentages you want to get to when your business is operating efficiently and profitably. So we can see that based on some guidelines, right? We have these different real sizes of businesses. This doesn't break it down by certain industries, but these are some frameworks for if my real revenue is between $1 and $5 million, if that's the size of my company, I can see that my profit might be targeted in that 10% range of that real revenue. My tax might be 15% of that real revenue. Owner's pay might be 10% of that real revenue. So if that's the numbers that we're shooting with, is that 1 to 5 million, if these are our targets, right? And we see that currently our profit is 3%. Well, now we know where we need to then move the needle to get our profit higher so that we can continue to work together to get to the goal gradually and move from our current to our target over time and make the necessary changes to our budget, to our spending to ensure that we...
Matt, let's talk about that. So let me interrupt you. Everybody, I really want you to get this. What Matt's saying right now is absolute gold. I just want to add something in so it lands a different way too. What Matt's also what he's also putting in is your sales goal of your company is wrong if you don't have these percentages set. You may think your sales goal of your company needs to be $3 million, but once you do the profit first model and you adjust profit to 10%, owner's comp to 10%, taxes to 15%, you're going to realize that your sales goal has to be sizably larger to meet that new budget requirement. Like, I need you guys to really hear this. With almost 90% of the clients I coach, I don't care if they're billion-dollar companies, multi-million-dollar companies, startups, when I plug in what they think their budget is and plug in their sales goal, it may line up. When you plug the sales goal into a profit first budget, does not even come close to lining up. which is scary to some people. It's frustrating to some people, but at least your model is now working off a correct model. So this is really transformational when you're at the very beginning of the year like we are today, and you've set your 2023 sales goals. There's a high probability your sales goals need to be adjusted once you plug into the profit first model. Sorry, Matt.
No, that's great. That's a great point. And I think what we're seeing here is some general guidelines. We then need to figure out, well, how do I set the correct amount of owner's pay? How do I set the right profit target, which we'll talk about in a second? Are my operating expenses the right number, sustainable? Because over time, if our operating expenses are too high, we're going to want to be adjusting those to get our profit better, right? Because if at the end of the day, if this is about your personal wealth and your business wealth, like it's going to make your financial life better when we have the right framework and the right numbers to be shooting for and aiming for. And if we don't, something isn't right. If we're at below industry average margins, something's not right. What needs to change to get us there? And it's not all solved by revenue. It's not solved by revenue. It's like, how do we solve for it based on where we are today? What changes do we need to make? And so that's what we're going to then be thinking about and looking at. And so one of the big things that oftentimes, entrepreneurs struggle with, and within this formula, is their own pay. Like, how do I pay myself as an owner? And how do I set that in this formula? Because Aaron alluded to some of this before. Like, I'm just taking distributions here and there, or I'm just, maybe I'm on some salary, but like, what are some of the key variables to setting up your owner's pay?
For me, it's starting with a personal budget. Your personal budget must be set first, because that personal budget impacts your business budget. If your business budget's then wrong, then your sales goal is wrong, like we were just saying. So the genesis of the success here starts with personal budgeting. And this could be a whole nother webinar, but personal budgeting has a lot of potential fluctuation to it. How much you putting away for personal reserves? How much you putting away for retirement and investments? How much you putting away for travel, kids, college funds? There's so many things. If you haven't outlined all of those things and set that into stone, then you don't actually know what your true, honest to goodness personal requirements are. So if that's not accurate, your salary distribution is not accurate. If your salary distribution is not accurate, that means your business budget is not accurate, which means your sales goals then are not accurate. So as you can see, there's a cascade of things here, but the genesis really is the personal side.
Yep, for sure. And then the other side of this is that we also need to know, like, we got to understand your industry, right? We also need to know, what does a CEO of a $5 million company get paid? Like, if I was to remove myself from my company, which is most of our clients' goal is to, and which enhances value, is when I'm no longer CEO, my company becomes worth more. But in order to hire that CEO, I need to pay them a market-based wage. So that owner's pay number should reflect the market-based wage for running your company at that size. And so we had a great question from a participant asking, from this kind of framework, is why does owner's pay go down, right? As we're a $5 million company or a $10 million company, because what's happening as we move up, let's say we're a $10 million company, 5% of that is $500,000. As the CEO of a $10 million company, you could likely hire the CEO for $500,000 per year to run that $10 million company. So that number, that owner's pay number, is going lower because that's the market, kind of the general range of market-based comp for that person to run that size company. Now, these numbers on here are not gospel. They're just a guideline, right? And then they might need to be adjusted, here and there. But eventually you got a $50 million company. Perhaps you're no longer even the CEO anymore. You are chairman of the board, and all you're doing is living off the profit being generated by the company. So owner's pay is going to be different at various stages. When you're a small little company, you're doing all the work, right? Like, you're doing all the work. You have a $250,000 business. Like, you are the primary doer in the business, which is why your owner's pay is really high. And so you're going to earn $100,000 salary on $250,000 of real revenue. That changes over time. So great. And I think what also is important to talk about when we talk about benchmarking against industry size is that if we're not thinking about our owners' pay appropriately, it's going to skew our profit margin. We have seen clients that take no salary, right? And then they say, oh, my company is really profitable. But $1 million business, the owner takes zero salary and shows $100,000 of profit. It shows a 10% profit margin. But if that owner of that $1 million company was now getting paid 10%, $100,000, their real profit is actually zero. They're making no profit. So we need to ensure that there's actual market-based wages being paid to the owner who's actively working in the industry, or else your true profitability is being skewed. So all of that needs to be considered.
Well said.
Which then takes us to the next point. Like, how do we then set a profit target? And the person who wrote the book, kind of on Profit First, has said, owner's compensation is the money you get paid for working in your business. Profit is the reward you get for owning it. And so as we kind of bob and weave across these various slides, you can say, eventually you're getting to this point where at a $10 million company or a $50 million, you likely have management in place. You aren't getting paid as the owner. You're getting paid as the shareholder and getting paid profit, not as an employee eventually over time. And so, Aaron, what are some of the steps? I mean, I think it's pretty self-explanatory, but what are the steps of setting that profit target? What are you thinking about and guiding your clients to, as they build those business budgets?
It's a really easy question. I mean, the chart that you keep showing, I actually concur. I think that those are very accurate numbers. So I'll just say it the way I'm used to saying it from my side. I always go between 10 and 15%. So whether you're a Greg Crabtree person, you've read that book, or the Mike Michalowicz book, I think most of us agree that somewhere between 10 and 15%, depending on where your company is in its growth curve, is appropriate. And so for me, the first step in implementing Profit First with this model is you set 10%. And you plug in your fixed expenses, your variable expenses, cost of goods, revenue, plug it all into the budget, and just see, can your business right now, given what it's consistently reliable producing in revenue, manage 10% profit, taxes, and break even? If it can't, if you're like, man, given what we're consistently producing in revenue, I can't hit this 10% and pay all my bills. No problem. Drop it to 8, drop it to 6. When I hired my finance coach, who's the one who taught me my version of this model, I was at 1.5 profit. We do our model slightly different. We're 1.5 profit, 1.5 capital reinvestment in reserve, versus a total of 3% in this model. That's where I started. I started with around 3%. And like any other goal with a business, I had a sales goal and a profit goal. So every month, my goal was to move up 0.5%. So that way, at a certain point in my year, I was eventually arriving at 10%. I don't care if you guys now, today, can do 10%. I care that you know where you are and you have a plan on how to get your company to at least 10%. That's what I care about. But I think that's where you start.
Yep. That's great. That's a great point. And then we need to, one, make sure our owner's pay is reasonable. They can't have no salary in there for the owner, right? That needs to be.
Can't do it.
Yeah. Then it's not real profit. Yep. And then we also need to know, the industry. I think it's really important as we think about our clients that have exited and we look back, it's the ones who have exited and maximized their values had best in class profit margins. They weren't at the bottom of the range. And so, where are we on this threshold of profitability, true profitability? Are we at the low end? What's the average? What's the best in class? Because as we want to keep working that target up over time, it's only going to maximize the value of your business. So you got to know your industry too. Like a grocery store, it's going to have low margins, right? So we need to know that in order to keep moving the needle in that right direction over time.
And Matt, I think this is worth inserting here. So as all of you are listening to this conversation, I think a note or something to noodle on afterwards when this call is over is, all right, so let's say I go into my budget. Man, my owner's comp is probably not market wage. So I'm going to adjust my market-based wage comp. I'm going to insert some profit. I'm going to set my taxes in there. And then, my income coming through the business may not be able to fund all this. But what's amazing about realizing that is when you go back with your team, you're like, hey, everybody, we got to have some strategic conversations. We need to up our profit margin. We need to add a new revenue stream. We need to push sales. Your financial knowledge, really digging into this information, has you go back to the other departments of your business and build a better business. The business owners that I know who really understand all of these little parts and pieces, it inspires them, it drives them to increase margins on a certain product or service, add another trade line. It allows them to do so much better thinking in their business. They end up building a much better business because, again, this caused them to think and see things differently. So I make sure we put that in.
Yeah, no, very well said. Very well said. And so, we showed you some examples. In practicality, we're going to have some spreadsheets built, right? That's going to figure out where's our current and where's our target. And feel free to email me. I can send you a generic template to, after this to, so you can plug in some numbers or look at your books and plug in some numbers. And there's a little, profit first template happy to share with you. And so then tangibly now, what else do we do? Aaron alluded to this, but like Barbara, what's the next steps? Like, what do we need to do to move things forward?
So it's actually really straightforward because what you're doing is setting up actual checking accounts and saving accounts so that you can make transfers over into these accounts on a regular basis. And the main operating account is going to be that income checking account. That's where everything goes in. Okay. And then you'll have your profit account and your tax account, and there's not going to be a lot of transactions going over there. You just do it a couple times a month. So it doesn't add a huge amount of bookkeeping to set up these accounts. I would say it's kind of like any project. You have the upfront effort of setting them up, but then once it's in place, it becomes very automated and straightforward to maintain.
Yep. So we're not spending any money out of the income. This is where every customer pays you. Your dollar shows up in the income account. And then when that happens, we're then going to be like at certain rhythms, certain timeframes, which we'll talk about in a little bit, is that money's going to be distributed to these various accounts. All of our expenses are being paid. We can pay off your credit card bill if you have a business credit card. You pay your rent. You pay your Salesforce subscription. All of this comes out of this one checking account. So all of your expenses come out of one checking account, and we're clearly separating things for their distinct purposes. And there's going to be an owner's pay account, right? That's separate from the regular payroll of your company. You have your own owner's pay account. Now, why is this important? Why do we have an owner's pay account? There's one little nuance to this owner's pay is, let's say that you're going to set your pay at $10,000 per month. 1 month, let's say 1 month, you get a really big, you generate a lot of revenue or a lot of income 1 month. You're going to set aside that specific percentage of owner's pay into that account. So this owner's pay account may go to 30,000, may go really high. You're still only transferring what you determine as your $10,000 owner's pay on that specific month. So there's going to be some carryover in this owner's pay, because if you have some seasonality in your business or some irregularity, is that big month that you generated all that revenue in needs to then satisfy your owner's pay for future months. So the entire account doesn't get distributed, but a specific dollar amount that you kind of set as your salary, even if a higher percentage was transferred into this owner's pay account. So there's going to be a dollar amount that goes from owner's pay to your personal bank account based on a fixed dollar amount every single month. So hopefully that helps as well. So great. We're setting up the bank accounts, huge part of this structure. And then the next real step on a regular basis, Barbara, is to do what?
Basically, you're going to have all that revenue that comes into your income account, and then you run the percent calculations that Aaron's talked about. And you may not start at where you want to be, okay, but you're going to start and over time build up to where you want to be. And you have the specific days of the transfers, which it can be once or twice a month, depending on what's best for your business. And then you'll take your salary from the owner's pay to pay your bills from the operating expense accounts. It's
Yep.
really straightforward from a bookkeeping perspective, because we can use tools. And that's one of the benefits, actually, is if you're working with somebody who knows what they're doing, then they'll be able to set this up for you so that it's seamless from your perspective. It's just happening and you're getting the reports and you can see, the accounts building and accruing, and know what your balances are and what you have available to spend, and focus really more on building your business instead of kind of worrying whether or not you've got what you need to run your business.
Yeah, I want to jump on that really quick. Because I'm doing this all day long with business owners, big and small, I have clients that are wanting to hire, like, Aaron, can I afford to hire this person? Or I want to bring in a CFO, or I want to hire this person or this person. And they're always asking, can I? And the beautiful part about this is when you have all these different bank accounts, you don't have to ask. You can literally see it sitting there. Your money's all separated and compartmentalized out. So you can actually make financial decisions for your company without feeling emotionally taxed or mentally taxed. Like, oh, I guess we should just do it. Let's just go for it. Let's see what happens. Those days are gone. You really understand how to make these decisions.
Yeah. And I think as your business grows and scales, what you're going to see is that expenses at different sizes of the company are going to change, right? Like once you get to $1 million, it's a new plateau. It's a new level of business. So we might now need to be spending more at a $2-3 million company than we were as a $500,000 company, right? And so it kind of, your hiring decisions are also going to be informed by some of this. And then as your profit margin grows, you're going to then be able to reinvest some of that back into the company. And that's why you see profit dropping, right? You see profit dropping once you get to this higher business, because it's like, we're now reinvesting at this. We need a little bit bigger business, little more investment at this $1 million level than we did at 500, which is why profit drops to some degree.
It does.
Less efficient. So, yeah, no, that's great. That's great. Sorry, it's loading here. But those are some of the key things to be doing. And so for your specific things, you're going to run the calculations. If $1 million came into your account, what percentage of that money is going to profit, tax, operating expenses, and just make the transfers on the rhythm that works best for your company. And then some of the additional items to consider after you're doing things on a monthly basis is that we've got profit. Basically what we want to be thinking about is, all right, I want to be taking some of that as distribution back to myself as the owner of the company. So what's sitting in that profit account on a quarterly basis, I'm going to make a distribution of half of that back to me to go and fund my personal goals or pay off debt or fund retirement accounts or make a down payment on investment property. The rest can remain into that profit bucket if profits slow down in the future, right? Or there's extra in the business that could be used to reinvest. But we want to be taking some profit out to diversify away from the business. Like, you as the owner should get paid, and that's what taking half of it out is important to do. Then we're also, these are kind of out of order, but in the same order, is we want to be recalibrating our targets quarterly, as Aaron said. So like, how are we moving from 3% to now 4%? What needs to change in our budget and our expenses to now hit that 4% profit P&L?
Yeah.
Now I want to get paid more as an owner. So we're continuing to regularly review our expenses.
Yeah. Can I hit the question that just showed up?
Yep.
So we have a question. Do you have a good program or app you like for creating a personal budget? I'm very passionate about this answer, so I want to take this one. The answer is Excel. Excel. Barbara probably has a different answer. I'm sure Matt does as well too. I love Excel because it's very, very accurate. I don't love how QuickBooks does budgeting. I don't think it does a great job tracking when you're moving your profit and your taxes and your capital reinvestment and your variable expenses. So all of my clients, I have an Excel budget. If you guys want a template, you're more than welcome to email me. I think Matt has one as well. But my template has 2 tabs, business tab, personal tab, and they interact with each other. So as you adjust your personal budget, your business pay structure automatically adjusts. And again, Barbara could probably speak to this. This is more her world of mastery than mine. But when I'm looking at my P&L, it's not showing me accuracy of variable expenses against my budget targets. With QuickBook or with Excel, I have my budget, my actual, my difference. I see accurately how my spending went based on my budget. So long answer, but that would be my vote. Barbara, Matt, what do you guys think? Program or app?
Yeah. Well, I think in the way that like we work is that you've got QuickBooks to help maintain the data. This is good for the accountant. That QuickBooks data, those chart of accounts organized properly, then get exported into Excel, which then get put into the Profit First budgeting system so that you can clearly see those differentials. So I think that's one, that's how this needs to all really flow together. There's other apps out there that can help you keep an eye on your spend, but it's not fully related back to this exact business budget like we're talking.
Yeah. And I would like using QuickBooks for business bookkeeping is excellent. And just like what Matt's saying, you can export these into Excel and have the comparison that Aaron's talking about. And there are definitely other things as far as like the personal finance. If it's something you do not want to manage yourself, you can also use QuickBooks for that as well. And and just treat your personal finance like a business. And so you have the same thing. You have your income and expenses, and you can run reports to show where your profitability is and get the detail that you want that way as well.
Yeah, exactly. And that's what I think the next point is like your chart of accounts and QuickBooks can help make the budgeting process better. Like you don't need to go off the rack for what QuickBooks Online has for your chart of accounts. How do you make it simplified to give you actionable data to then integrate with your budget better? So there's not differences between the Excel budget that Aaron talks about and your QuickBooks chart of accounts. How do you have a way to make it flow together more seamlessly? And that's by setting up your chart of accounts better, I think, is really important. And then, having somebody that's familiar with all this is really important because as the business owner, I don't know how much time you want to be spending in your books, in your bookkeeper.
That's kind of the whole point, right? If you are managing a large business, you want to be growing that business. You don't want to be spending all your time doing your accounting and bookkeeping. So working with people who know, I look at a lot of books and it's charming, frankly, when people try to do their own books. And how they will approach it, thinking that it's helping them when really it's not. It's actually hurting their business because they don't have accurate data to look at, and then they can't make good decisions. And pretty much a lot of times they've just built a job for themselves. They aren't actually running a business and building and growing a business. So I am a big proponent of working, offloading things to people that know what they're doing so that you in turn can focus on the things that you're really good at.
Yeah.
That's great. And I think for us, not everyone knows this, the historical, the accounting and the bookkeeping world usually went with the CPA and the bookkeeper. We are looking holistically at our clients' business, personal, and financial lives. And we found that making sure that our clients have really well-maintained books improves the financial planning that we can do, which then improves the tax planning. And so we've decided to make it our mission to ensure that our clients have their bookkeeping done with integrity so that the high level planning can be done meticulously and accurately rather than my accountant does my bookkeeping. I get something from them once a quarter and there's no actionable thing, or it's not really clear and it doesn't help. So we've created our own platform to do this holistically. And so that's why we've set this up. And, I know we're talking about profit. This might be a new concept, but we're happy to evaluate your current structures, give you an analysis of where you stand, from a profit first level, no obligation, but just hey, could this be improved? And could you improve with the existing team that you have? That would be great. And then it would help all the work that we do together. So,
yep. I'd say that business owners, you shouldn't be doing your books. So if you're on this call and you're doing your books, stop doing your damn books. It's a terrible use of your time.
It is.
You're not good. Yeah, you're not good at it. Stop doing it. let a professional do it. The way they look at them, what they'll see, a good bookkeeper will make you money. They are not an expense to your business. They will 100% make you money in the course of the year. Finding things, fixing things, tax-wise, they will make you money.
Absolutely. Absolutely. So I know we've covered a lot. We've got a few questions. I guess the quick recap before we hit like one or two pre-submitted questions, unless anyone else has any, questions to submit, is I want to recap. All of your revenue needs to go into that income checking account. We need you to determine your current allocation percentages. So look at your historical financials through the lens of profit first. Come up with target allocation percentages. Right? Where's the industry at? How do I make sure I'm getting paid fairly as owners pay? What should my targets be? And then you need to set up those separate bank accounts. So kind of the first few things. Then you want to develop your rhythms to implement. Am I going to look at this once a month? Are we going to do this twice a month? How are we going to work? What's the right thing for your business? So develop those rhythms, schedule it, and then work with your team, work with your bookkeepers, your business coaches, your financial planners, to ensure that this all is tied back together. So happy to talk more about this offline or send you any resources. But I appreciate you being here. If you have any questions, submit them. We had a few people write in questions before this. And one of the questions that we kind of touched on a little bit was, can this work with personal finances? And I thought Aaron you'd be great to.
I love this one. So my finance coach taught me this from business and personal together. So just like the business is going to have different bank accounts, your personal will too. So just as some templated ones, a travel account is great to have. Personal reserves. Personal reserves are like emergency money. You want at least 6 months of reserve set aside, or whatever Matt tells you. Investment money. So whether you want to buy an investment property, put money in crypto, put money in the stock market, 401k, if you have kids, college fund, that kind of stuff. But open up as many accounts on the business side, also on the personal side. So if there's something unique, you're saving for a home, you're saving for a new car. I have a new car account for myself. I like cars. So the more bank accounts you can set up on the personal, same concept, helps you personally diversify your money and separate that into bank accounts. Works like a charm.
Exactly. You got your personal checking account, income account, money flows in there, and we make our transfers. And this all ties back to that business budget, your owner's pay and your profit. Everything can work together once it's all coordinated and set up. But hopefully that gets you all set up. We did have a couple other quick, questions that I can answer. One question that we had. So someone says, I take all of my owner's pay through distributions. Do I still need a profit and a separate owner's pay account since all the money flows to them as the owner? And the answer, as we touched on earlier, is yes. You need both an owner's pay and a profit account. The owner's pay is distributed to you like your salary, like you're an employee of the business. The profit is the income that the business makes for you as the shareholder of the company, that's then distributed quarterly. Similar to Apple paying a dividend, that pays a quarterly dividend. You are paying that profit dividend to yourself on a quarterly basis. So you need to make sure that all of these structures are set up. You can't shortcut it. You can customize it, but you can't shortcut it. So yeah. Want to thank everybody for being here, taking the time, learning. If you have questions, you can reach out to myself, Barbara, Aaron, about these structures and systems. And appreciate the opportunity to talk this over with you.
Thank you, everybody. This is great.
Yeah, thank you.
Awesome. Wonderful. Have a great rest of your day. Thank you for being here and look forward to seeing you again soon. Be well.
Bye, buddy.